into our cryptocurrency segment. In today's top story, today's only story, because it is so top of the top, it's the front of the front. That's avant-garde from my friends over in France, if you know what I mean, is going to be the China market opening delayed until February 3rd on the virus upheaval. This coming to us from Bloomberg. Let's get into this. Now, China's financial markets are going to be kept closed until next Monday, because authorities have extended the Chinese New Year holiday by 3 days while struggling to grapple with the outbreak of the coronavirus. In official announcements, the Shanghai and Shenzhen stock exchanges said trading will resume on February 3rd, while authorities in the city of Shanghai advised that companies shouldn't return to work until at least February 9th. Just to recap, the Chinese markets were supposed to open today, and they are not. Although China's mainland markets will be closed all week, offshore traders are finding alternative markets with which to express their concerns. In Singapore's futures market, their FTSE China A50 index sank as much as 5.9% on Monday, seeing further declines heading into after-hours trading. The offshore yuan fell 0.8% in the overseas market, falling below its 50-day and 200-day moving average. Now, China's stock market happens to be the world's second largest and saw its last trading day on January 23rd, prior to closing for the extended New Year holiday. When markets closed that Thursday, the Shanghai benchmark tumbled 2.8%, making it the worst ever performance in its 3-decade history. By Monday of this week, market insiders were already spreading the word that stocks and futures trading, as well as interbank transactions for bonds and currencies, wouldn't be resuming until February 3rd. Now, back in 2003, during the outbreak of the SARS virus, Chinese officials had extended their May holiday market closure by 4 trading days. Financial markets in Hong Kong reopened that Wednesday, with the city's benchmark Hang Seng Index closing down 2.82%, marking that the biggest one-day loss in 6 months. Now, on Saturdays, it's the day that follows Friday. On Saturday, the city's chief executive, Carrie Lam, raised the government's emergency response to the highest level over the coronavirus, stating that the outbreak could extend the city's recession well into 2020. Hong Kong had 6 confirmed infections as of Sunday. Now, the virus seems to have renewed tensions in Hong Kong, with protesters returning to the streets and medical staff threatening to strike if the city doesn't begin to limit the spread of the virus by closing its border with China. China has cut off access to Wuhan and quarantined 16 other cities to prevent people from leaving and spreading the virus further. The outbreak is said to have infected more than 6,000 people on the mainland and abroad, but many are skeptical of the data provided by Chinese officials, suspecting that a cover-up is taking place in order to downplay the crisis and not trigger further panic. Authorities said on Sunday that the infectious disease is not under control, as officials struggle to contain the outbreak despite placing curbs on movement in some cities. At the center of crisis in Wuhan, the mayor admitted to 5 million people leaving the city before instituting the lockdown, offering to resign over his handling of the crisis. Now, global market uncertainty and fears surrounding the outbreak is leading many to wonder if Bitcoin's surge in price relates to these troubling times. Following the escalation of the U.S.-Iran conflict earlier this month, fears of World War III sent Bitcoin's price rallying. And the narrative of Bitcoin as a safe haven asset and hedge against global uncertainty returned to the popular discourse. And now it seems a doomish sentiment surrounding the outbreak is fueling Bitcoin to new yearly highs. On January 26th, just 3 days after the Chinese city of Wuhan was put under quarantine, Bitcoin's price began pumping from the $8,300 area. Now, while the virus seems to be impacting the United States and Asian markets, Bitcoin has been performing exceptionally well the past week. But is it at all related? Analyst Simon Peters from eToro, for example, stated that prices jumped to near 3-month highs following turbulence on traditional stock markets, reinforcing cryptocurrency's growing position as a possible safe haven investment. Others, however, insist there is little data to support the theory that these troubling world events are related to Bitcoin's recent good fortunes. And some point out that this shifting trend in the crypto market is instead connected to developments within the cryptocurrency industry, such as favorable regulation being introduced or the ongoing buzz surrounding nations developing their own digital currencies. Others state that the influence and manipulation of crypto whales is to blame for this, citing the so-called insider trading and tether printing as the main catalysts behind these rallies. So again, I think that there is a huge aspect of this that is uncommented on. So the question on whether this is correlated or not, I think it is silly to dismiss these ideas. Again, I hear the fact that everything is baked into the price. It's not. There's almost nothing that's baked into Bitcoin's price. Bitcoin is extremely speculation driven. It is extremely volatile. It depends. I mean, listen, anybody that says that everything is baked into the price of Bitcoin was not around in 2014 and 2016 when China banned crypto, right? You guys have not seen the response to market volatility. Yes, are there market participants who to some degree foresee these events and play against them? Yes, guess what? That happens in every market ever invented by mankind ever in the history of time. There's always market insiders. There's always whales. There always is. There always will be. It's the way